Good afternoon, ladies and gentlemen. My name is Zara Ritchie. I have the pleasure of leading our transfer pricing practice nationally in video. I'd like to welcome everybody from Australia, but also I know we have some international participants today as well. So thank you so much for joining us. So obviously today our focus is looking at transfer pricing and customs, not just the risks, of course, but also some opportunities. Now, when we were putting together this session, we discussed what some of the areas might be that we'd like to explore, and there's a very wide-ranging number of areas, so we're probably only going to touch the surface on some of them today. But bear with us, hopefully you'll get some good insights to take away, but also you might have some additional questions that you take away as well. But if it's thought-provoking, that's great. That's the intention from us today. So I'd like to introduce our panel. So our guest speaker today is Brianna Wittenho, who's the head of tax with Ixon Group. And additionally to Brianna, we have two partners from BDO. So Mike Smith, who's a transfer pricing partner, and Bill Cole, who's our international trade partner based in Melbourne as well. And we're all based in Melbourne. So we're bringing this to you from all of our homes at the moment because, as you know, outside of Melbourne, you're all free and we're still locked away. So look, today's session is, as I said, it's about transfer pricing and customs. And obviously in Australia and globally, governments and businesses are turning their attention to the long-term impact of a number of things. Of course, currently COVID-19, but that's not the only thing. We have geopolitical instability, and we've had an extension of trade wars, over the last couple of years. And as many of you would know, depending on what industry you're in, they don't seem to be getting any better, but more challenging as the days go by. So these significant events have, of course, collectively or individually disrupted your business outcomes and how you operate your business, prompted government policy, impacted revenue expectations by governments and businesses alike. So we'd like to explore what some of these issues mean for your businesses from a tax perspective, transfer pricing, customs, international trade, as I said, and what you might be dealing with or thinking about in terms of your own business strategies or supply chain considerations. So there will be a fairly heavy focus today talking about the supply chains of businesses. So just to kick off today, we'd like to start with some polling questions. We find polling questions are always quite helpful in setting the scene and understanding where some of your issues might lie. And so that will help us frame up some of the discussion areas that we explore and how long we spend on some of those discussion areas. So we'll bring up the polling questions now. We've got 4 of them. So if I could ask you to please respond to the first question. And look, while you're doing that, I will just also mention in the background that you're all muted, as I think you've already worked out, and you can send us questions throughout the session, and we'll respond to those questions as we go. We'll also leave some time at the end for more discussion and questions, but we would very much like to make this a conversation and make it more interactive, so please do send through your questions as they arise. So the first question, what are the results to the first question? So yes, how has it impacted you? Some of these events, 56%. Well, a third of you are saying there hasn't been any significant impact. So I think that's good news for a third of the audience today. Let's move to the next polling question. Thanks, Kate. So as I mentioned, we will focus on the supply chain a little bit today too. So we're just keen to understand whether your business has already started to think about how you might need to modify or diversify your own supply chain. Let's bring up the results to that polling question. Okay, so nearly half of you are saying no need to, and the other 50% either already underway or may well continue underway. Thank you. Let's go to the next question. So I think this is an interesting question, having had the budget handed down a couple of weeks ago in the middle of a global pandemic. So which announcements by the federal government do you think might favourably impact your business? Hopefully there's a bit in there for everybody, but some of the discussions we're having with clients, there are some great concessions in there, but some of them you need to have cash or funding to benefit from. That's interesting. Okay, so a third of you are saying yes, there's some benefit but moderate, and 2/3 of you are saying either no or minimal positive impact. So that last part is what I was referring to. A number of our clients are saying the same thing. Thank you. Last question. So this one sort of brings us to the heart of some of the issues we'll discuss today, but not all of our focus. But we know that there is a natural tension between transfer pricing and customs. And one of the points that we'd like to discuss is whether you, in managing that tension, whether you may favour one taxing authority over the other, or you try to give them equal favour and deal with it on a case-by-case basis. Let's see the results, please. Okay, so don't favour either or don't know. So, all right, thanks, Kate, for the polling questions. So let's move into our panel discussion. And I guess I'd like to kick it off by talking about some industry challenges first off. And Brianna, if I could start with you, please. Can you share some observations about the impact of some of these events on your particular industry and your business?
Okay, yep, thanks, Dara. I might start off by just sort of introducing myself more fully. Ixom, I'm sure everybody's heard of it. It's a household name. Not really. We were established 5 years ago and are a chemical distributor and manufacturer. So we have two very important parts of the business: manufacturing, chiefly chlorine and its derivatives locally, as well as bringing in a lot of chemicals. So a very big supply chain focus. And in terms of how 2020 has impacted our business, we've thankfully been very essential in a lot of our customers' industries, serving water care and agriculture. So our underlying business has been very insulated, but that doesn't mean we're not worried. And the thing that's particularly concerning a lot of our finance people is not so much right now. The last 6 months, everyone's hanging on. We're more worried about the second and third waves of financial impact from COVID. So we're looking at bad debts as liquidity crunches bite our customers. So we're thinking that will be a 6 month, T plus 6 month sort of issue. And even more esoteric, we're kind of worried about banks, and will the banks have a liquidity crunch, and will that then impact our access to finance and the ability to keep rolling our business? So that one's a tricky one to deal with, because most people, most businesses would have all of their finance facilities in place, and you wouldn't necessarily think that when you go to draw them that for some reason the bank would say no, we can't. But that's a possibility, particularly as sort of the COVID bankruptcies and the impacts of loan deferrals start running out. Thinking things might get interesting in the next 6 months. Not that they haven't been massively interesting recently, but we still think that more fun is to come.
Yeah, it's an interesting point you raised, Brianna, because when you think about it, certainly in Victoria, JobKeeper is going to be propping us up a bit until the end of March. I know it finishes sooner than that in other states across Australia, but the real cracks are probably going to show when some of those government supports drop away, and there's probably a bit of a false sense of economy, even though many businesses are doing it really tough, but nevertheless. You mentioned about banks and that it hasn't sort of affected you perhaps as badly yet, but you're concerned about the sort of the next wave. What are some of the things that you're thinking about, or you're doing, or looking to do to respond or to manage through that next wave?
Well, pretty much the first thing our CFO did was take all of our undrawn facilities and draw them. So instead of relying on the banks to continue their funding of us and we're, in the scheme of things, a fairly small client of most of our banks. Rather than taking the risk, we've taken the cash, which is great fun from a thin capitalisation perspective, but the tax tail shouldn't wag the dog. So that's the things we're doing now. A couple of our accounts have started to turn bad, so we're starting to see some of those things flow through, and we're working on that on a case-by-case basis. It's not generally the tax person who gets involved in those, though.
Yeah, but certainly cash is king. Yeah. So
king.
Yeah, for sure. And maybe with slightly different sort of focus, Bill, from a manufacturing and a supply chain perspective, what do you see as some of the sort of short and or long-term impacts on industry sectors? We're certainly seeing some increases in prices now. In the short term, we've seen, challenges in actually accessing products, supplies, raw materials because of some of the blockages in the supply chain. So what do you think we'll see over the next 1 to 2 years? I think you're on mute, Bill. I think you're still on mute. Can't hear you. No, we still can't hear you. We might, this feels like the federal budget repeating itself for me. We might just skip someone else.
Yeah, well, I can talk a little bit about supply chain as well. So as a manufacturer and distributor, we have, certainly one of the key things that we do is look to diversify suppliers and maintain a security of supply. And the recent environment has just made that much, much more urgent. So I certainly have seen a lot more projects come through looking to diversify supply, make sure that we can get the same or similar products from multiple suppliers in multiple jurisdictions. We're looking at bringing local manufacturing more in-house. So where in the past we might have relied on toll manufacturers or other diverse supply chain sources, we're actually looking to increase our control and bring some of those things in-house where we can. And the logistics works. We're building a new chlorine pack-out area in Laverton, so we're trying to bring those, expand our control over the supply chain and shipping and things like that. So that's been our response, and I'm sure anyone dealing in goods is doing a similar thing.
Absolutely.
It's probably a good example of perhaps some of those budget measures being useful to certain corporates, because clearly the sort of onshoring of supply chain, particularly in important industries like chemical, PPE, etc., was one of the main objectives there. So I've certainly had a couple of conversations with clients, just really sort of planting the seed as to whether they'd thought about bringing back onshore some of those things that might otherwise not be, given the availability or potential availability of some grants in that space.
Yeah, my EVPs are definitely very excited about all that. There was an email sent around with a whole lot of highlights across it.
Yeah.
And even where there aren't incentives, I mean, talking to clients and colleagues around the world, it's just a trend that we're seeing, onshoring, reshoring, just taking as much risk out of the supply chain as possible. So if you can bring manufacturing onshore, then you're ensuring certainty of supply to some point, to some degree. So I think it's absolutely a trend that we're seeing all over the world. And there are some countries that are particularly trying to attract that investment or reinvestment. Bill, I don't know if your microphone's working next, otherwise I'll move on to... No, it's not. Okay. Sadly, Bill, your microphone's not working. So maybe you might want to just jump off and dial back in again. And I might go to you, Mike, and we might talk about maybe what are some of the challenges or similarities between, say, the GFC of many years ago and then this a different type of, economic crisis that's driven by, a health pandemic. So what do you think COVID's going to do to, for governments to react? We saw BEPS as one reaction post GFC. What does your crystal ball tell you that, we might see coming down the line?
Yeah, my crystal ball says that we're likely to see a lot of similar reactions as we saw post GFC. So I actually just arrived in Australia as the GFC kicked in, so late 2018. And it was a different world back then. No one had ever heard of transfer pricing or was really interested in international tax. But when the GFC took place, clearly many countries were keen to hold on to their share of a decreasing tax take. And they decided that multinationals were the easiest targets when it came to making sure they got their share of the tax take. Probably the cynic in me says because multinationals can't vote. So as a result, we had a number of measures, both domestically and internationally, designed to do two things. The first thing was to increase transparency. So things like country-by-country reporting and requirements to lodge general purpose financial statements rather than reduced disclosure special purpose. And then other things in the nature of big sticks. So in Australia in particular, new tax rules for the big end of town, diverted profits tax, multinational anti-avoidance law, and the most heinous of all, the increased penalties for late lodgements by SGEs, which now start at $111,000 and go up to more than $500,000 very quickly. So it's definitely a combination of increased transparency and big sticks. In terms of what might happen this time around, I think the similarities are clear. We're going to have a shrinking tax take that many jurisdictions will be after their fair share of. How will they do that? Well, I don't think transparency is necessarily such of an issue. Post GFC, the real buzzword around the OECD was about eliminating double non-taxation, stateless income. I think there's less of that on the table now. And in fact, the ATO has been publishing what they call the tax gap for several years now, which is where they basically assess what they expect multinationals to pay versus what they actually did pay. And that tax gap has come down and down and down, and it's actually much smaller now for multinationals, for the big end of town, than it is for small business. It's about $2 billion shortfall for multinationals, and it's about $11 billion for small business. So all the stuff that we used to see in the papers bashing the multinationals, I think there'll be more behind the scenes going on in that perspective. Less of it in the papers because, I don't know, we've all been there and done that, and maybe there's less mileage from bashing the big corporates going forwards. But otherwise, I fully expect there to be actions taken by jurisdictions around the world to make sure they keep a hold of a bigger share of a smaller pie.
Yeah, thanks, Mark. I think they have to, don't they? There's a lot of incentives that governments have, had to kick in to keep the economy, from going further backwards, too far backwards. So they have to fund it somehow. So I think there's no question it has to be now a whole raft of integrity measures, and we're actually starting to see those already, kick back on. I think there was a level of empathy and pause button hit by the tax authorities, not just here, but all around the globe, when we're in the midst of COVID. But I think the reality now is that we actually have to learn to live with this for a period of time, and we don't know how long that period of time is. So tax authorities aren't going to keep, the pause button on hold forever. And anybody that saw 60 Minutes last weekend and Will Day and the discussion around high net wealth individuals, parking monies offshore, clearly there's a significant focus on individuals as well. And there's a new ATO program on the next 5,000, which deals with private groups and, wealthy individuals. So it's not just multinationals that are under the spotlight, but sadly, I think multinationals will always be under the spotlight.
Yeah. The other interesting part might be the timing of when this kicks in as well, because during the GFC, there was sort of concessions, deferrals, less activity by the tax office. But I think it's fair to say that within sort of 12 to 18 months afterwards, memories were quite short and it was back to business as usual. So what that means is we might have a period of calm now, which might be coming to an end which might be followed by the hammer of Thor when it comes to tax authorities trying to get their tax adjustments.
Yes.
Mike, I think we've already started seeing that period of come to the end from the ATO at least. They seem to be all back on.
Yep. I agree. I think that's right, Brenna. I'm going to ask Bill a question. I've got my fingers crossed that he's going to be able to answer it with the microphone now working. But Bill, can you maybe comment on what you're seeing or expect to see from customs authorities this time around, and does that look any different to what it was post GFC? Are they as empathetic and understanding as what the tax office have been?
Can you hear me, Zara?
Yes, good. We can hear you. Yep.
Well, I think the hammer of Thor has clearly been brought down on my internet, which is very pleasing. The term empathetic is one that's not typically been used in the past for customs, and my observations of recent times is that the auditing being conducted on areas predominantly around value, such as the pricing of goods, and particular transfer pricing, and the classification of items for their duty purposes has been rigorous. It has been uncompromising, and it has invariably resulted in extended negotiations and/or disputes in the last 6 to 12 months. That obviously in the Australian context is disturbing enough, but I think a lot of these things that we're discussing today are very, very much mirrored in global circumstances. So the recent WTO report on protectionist measures, October 19 to May 20, was describing something like 150 new measures introduced by G20 countries. 40% of them were trade barriers. So the remainder were around PPE and COVID measures to increase the flow of health-related equipment, but 40% of them were trade barrier related. So the protectionist push and the, if you like, focus on revenue, focus on, I suppose, dissuading foreign outflows of capital through paying for imports, etc., is alive and well globally. And in a humble way, the Australian customs authorities are mirroring this. Traditionally, the adoption of an approach where advice has been sought, stable agreements developed with the Australian Border Force in order to overcome these difficulties or to smooth and facilitate trade are still in place, but they're becoming harder and harder to access, or the process to put them in place is taking longer and longer. So we've certainly caught the global cold, so to speak, in terms of the revenue focus.
I don't know, Bill or Brianna, maybe both of you, would you maybe like to make some more comments in relation to the Trusted Trader Scheme and whether that's got any sort of benefits or upsides in the current environment? Is it worth the effort?
I think from ICSOM's perspective and things that my regulatory colleague has seen from his peers in dealing with Trusted Trader, we're not certain of the benefits. So there's, like the ATO's Justified Trust program, there's a bit of effort to get into it and get up to speed and get the communication going. But we're not certain that we've seen any particular benefits for ICSOM. But that said, from my colleague talking to his peers, we haven't seen an increase in regulatory activity from Border Force, whereas a lot of importers who aren't part of the Trusted Trader Scheme have seen an increase. So it may not be an absolute benefit, but more of a relative benefit. Bill, with a broader lens than me, have you seen anything else?
Look, your point's well made. The purpose of what are effectively supply chain security programs was intended to divide the trading world into trusted or known importers and exporters and unknown. the known ones being considered less risk and subject to benefits and facilitation. I think it's true to say that in the times, probably 2 to 3 years now, where we've seen halting trade, economies that are spluttering along, not romping along. I think the division between those two groups has been left behind, and authorities generally around the world are looking at broader issues such as revenue, such as prohibited imports, and the purposes of these programs is breaking down, as I would argue some aspects of rules-based trade is breaking down. So we're seeing, if you like, a bit of a collapse in approach.
Thanks, Bill. There's a couple of questions actually that have come through. I'd like to just maybe kick off with the first one. And it's probably more directed at you, Bill, but given the recent problems or challenges with supply chain for goods coming in from overseas, and what's going on with China imposing selective tariffs on Australian exports, was this a missed opportunity for the Australian government, both federal and state, to provide greater incentives to encourage more home-based manufacturing for essential and non-essential goods, not just R&D and the modern manufacturing incentive, but have they missed an opportunity to do a whole lot more, which some of the other governments around the world seem to be doing? If you look at places like the US and UK, they've got some very significant programs that they're introducing.
I suppose the question starting point, of course, are the trade wars that are springing up all over the place. I mean, yes, Australia's being drawn into them, but we're not alone in that. So once again, I'd put it to the audience and to the panel that we're actually part of a broader pattern. In terms of the onshoring or re-establishment of manufacturing capabilities, localization rather than globalization as government policy, that is also a global trend. In terms of Australia, we're fundamentally dealing with a contradiction. So we've taken this what I'll call an aggressive free trade setting for many years now, in opening our borders, in pushing free and fair trade. The process of re-establishing industries in onshore and particularly in certain sectors, is therefore fraught with some difficulties. So yes, the object of creating self-sufficiency in certain areas of industry, strategic trade policy, it used to be called, is absolutely logical in times of hardship, crisis, stress, etc. But a bit like the protectionist mantra of there are winners and losers in free trade, there are also winners and losers in onshoring. If we look at the US example, President Trump has undertaken to bring more and more manufacturing operations back into the US, and that immediately cuts down the volume and value of trade circulating in the world. The problem with that is it's robbing Peter to pay Paul. So the government has certainly missed opportunities to broaden the approach of bringing manufacturing onshore, but I just think that the policies that we're hearing are just undercooked. They don't really contemplate the full extent of what's needed to do that. They don't contemplate the implications of our international obligations in doing that. There's a lot of detail in there that's missing, and quite frankly, the idea of just selecting 5 or 6 sectors of the economy where manufacturing will be promoted and other areas not, I think needs a lot of explanation that we don't have. Look, the problems with China, I think, are more about diversification, about businesses strategically looking at where their risks lie and where their supply chain weaknesses are. The problem with China has always been that we basically trade with China. We don't trade significantly with more than about three or four countries, and that's nobody would accept that as an approach for their superannuation.
Yeah, good point. Brianna, did you want to add anything?
Well, not really. I mean, I guess going through the Modern Manufacturing Initiative, it is one of those trying to pick winners things. And given it is a grant-based regime, there's nothing. It's always going to be a bit slower to get started. So, you know, we've got perhaps marginal projects that if they depend on the grant, then we don't know when we can get started on them. So it's, I mean, just from my personal mind, not as efficient as, say, the R&D incentives. But yeah, some of them are a bit strange. Just looking at the priorities, space is one of the priorities. Yeah, I'm not sure what Australia's natural advantage in that area is.
Yeah, don't seem to have a huge industry sector, do we?
That's a result of previous policy settings as well, right? Like we used to have, you know, rewind 10 years again, comparing pre and post GFC sort of stuff. We used to have a much bigger manufacturing base here in Australia before, you know, subsidies to local manufacturing ended, before the Aussie dollar got so high, which hollowed out our manufacturing industry totally, which is why we find ourselves in the position we're in. So any of that support from government needs to be long-term in nature, such that businesses have comfort that in 5 or 10 years' time, we don't have another ideological war on local manufacturing if it's been brought back onshore for good reasons, such as security of supply, etc. But then it's not necessarily as competitive as it might be to source things, if price is your only consideration, more cheaply overseas. So, yeah, it's a big call.
It was eloquently put by an academic in Adelaide about 6 months ago that the issues for Australian manufacturing were not price and labour, but they were productivity, indirect cost, and supply chain. And those are very, very different focal points for government policy. And I mean, productivity has been noted for a decade now as being a significant issue in pretty much everything we do. So the fundamentals need to be right for any business, let alone a manufacturing business, but it's clearly key in terms of developing or expanding existing industries.
So I'd like to just continue with this theme on external trade, but perhaps take some of the politics off the table and talk about the business side. Because it is what it is, I guess. The way that I would look at it is, you know, there are these challenges in the supply chain, there are trade wars, there are limited incentives that governments are offering, so they may or may not apply to you. To your point, Brianna, you know, it's a small list of, you know, industry sectors that can take advantage of what seems to be a pretty small, you know, overall incentive that's being offered. So what do businesses do? You know, it is what it is, as I say. So I don't know, Bill, whether you want to kick off with any thoughts about, you know, what are some of the steps or frameworks that businesses need to be thinking about to respond to these challenges, because they're business issues and they're not going to go away anytime soon.
I've thought a lot about this, and the elevation of supply chain risk to the top three in global CEO surveys of recent times is gratifying to me in one sense, because for once you know, the wild west of getting goods from one country to another is coming under the spotlight. But I think it's true to say that COVID has brought out the weaknesses in supply chain. Similarly, the geopolitical and trade war stuff has emphasized it also, because South China Sea, Straits of Hormuz, you know, these are risks for the passage of vessels, etc. But I think if we take it all apart, the first question for business is, what is the market or environmental risk in the country of destination? And I come back to the China example, but it's not the only one. The China example says to us that you put all your eggs in one basket and you're captive in terms of political decisions, you're captive in terms of market and competitive structures, you're captive in terms of ultimately price, because you have no arbitrage of duties with other markets. It's just thinking that would never be accepted in any other realm of economic activity. So I would put it to business that the real problems in that these times bring up are strategic ones. What do I mean by that? The identification, assessment, and mitigation of risk has never been more important, and that takes its form in the physical movement of goods, the financial transactions that flow with them, the movement of information. All of these things need to be assessed, because in 21st century commerce, all of them are equally cost neutral or profit areas in a transaction. So my point is, firstly, that where are you sending your goods determines your supply chain, and in doing that, it creates a limited series of opportunities that will be more or less risky. So stepping back from a decision around markets, the supply chain shocks have been significant during COVID. Of course, the sea freight has got off the best in terms of only really being subject to delays, etc. But perishable goods and high value, low volume goods going by air have received incredible certainty and cost shocks. In Australia, we were looking for a long time at increases of air freight costs of up to 5 times what they were previously, and that was basically because most of Australia's air freight went out in the belly of passenger aircraft. Of course, that passenger aircraft trade has stopped. Freighters have replaced some of that, but in Europe, I was speaking early on this year to some colleagues in France. They were talking about 10 times the cost. So the landed cost calculations for so many things have been disrupted. The problem is, of course, we don't fully know where that cost curve is going to go over time. So obviously, it's not going to go back to a position where passengers were effectively subsidising the freight in the belly of a plane. But we're going to be somewhere higher. Along with that, you know, are there going to be disruptions that will stop planes flying? These are the kinds of questions that need to be considered. How do I track my goods? How much inventory do I store in a destination port? There are many mechanisms that float around these risks, but I would put again that the strategic decisions have to be made about how business is conducted, where production occurs, and what markets are being serviced. And all of it can be brought down to dollars. They're not hypothetical risks anymore. We've got excellent examples of what it means to have your container sitting on a wharf in Shanghai with nobody clearing it. And similarly, a ship full of coal at Ningbo sitting there for days and days and days. We know what it costs for that.
Thanks, Bill. Brianna, before I ask Mike some sort of tax-related questions, because I think that there, as much as there's risk and cost, there's also, you know, opportunity and optimization. So, maybe we'll complete the circle around that. But from your perspective, what are some of the things that you would be considering if you are restructuring the supply chain? What are some of the fundamentals that you would look at?
I think security is the key one, and one of the things that ICSOM prides itself on is that we are a distributor and we are able to get these chemicals in as our point of difference, as our value offering. So Bill, I think, was talking a lot about exporting. ICSOM is, in terms of Australia and New Zealand, is much more often an importer. So we bring goods in, and yet the 2020 has just accelerated, things that were in the past, marginal business cases, things like running our own tanker or bringing onshore supply, also onshore manufacturing, are now, with this supply chain security overlay, on top of it are now going from a marginal or unprofitable business case to actually something we should invest in just as a matter of course. So it really is changing a few of those decisions.
Yeah. Thanks, Brianna. Mike, do you want to make some comments on, maybe from a tax or transfer pricing perspective? Because, as Bill was speaking, from the commercial perspective, of course, managing risk, supply, they're all critical #1 issues. But when you are considering your business strategy in terms of, okay, what should your supply chain look like going into the future, or how you should be perhaps modifying it, what are some of the tax or transfer pricing add-ons that can be, I suppose, a sweetener in some of this?
Yeah, absolutely. So whenever you're restructuring, there's obviously a tax overlay to that. So there's probably a couple of angles. There's the opportunities and the risks that you've got to manage. So when it comes to opportunities, when you're thinking about supply chain, you can also consider whether there's any tax benefits for doing things a different way, and whether that's mitigating a customs or duty cost, or whether it's an effective lower tax rate for the group. All of those things can be on the table, because if you've got a commercial reason for doing this restructure, not a tax reason, that's the right time to think about those questions. So there's opportunities in terms of your supply chain restructures from a tax perspective. In terms of the risks that need to be managed, the main thing to be aware of is that contemporaneous documentation or evidence that support those commercial reasons is absolutely critical. Again, with the benefit of hindsight, tax authorities will be looking at the decisions that are made now in 1, 2, 3 years' time. And with the benefit of hindsight, it'll be very easy for them to challenge positions that might be taken. But those positions that might be taken will, I'm sure, be taken for the very best evidence and reasons available at the time. So the contemporaneous documentation aspect is the key risk that needs to be managed. And really that's as simple as keeping a defense file that covers any of those key conversations, any of those key business papers, board meeting minutes, etc., that set out the reasons for why you might be changing up what you're doing and why you're doing it. So risks and opportunities when it comes to these things.
Yeah, thanks, Mike. And I guess to that point, we're talking about supply chain restructures and, looking forward, but in the current environment as well, in the COVID environment, where there are a lot of costs, additional costs, I should say, and to Bill's point, prices have increased, cost of everything's increased, so those costs have got to be borne somewhere. So Australian businesses have to be comfortable and analysis robust if they're accepting additional costs or reducing profits or increasing losses, whatever the case might be, because we do know that that's something that the tax authorities are very sensitive to, particularly in this environment. There are a lot of losses around, so who should be bearing those losses and how do you evidence who should be bearing those losses? And I think you alluded to it earlier on, Mike, but some of the lessons learned from the GFC, the tax authorities had short memories, as you said, but also I think what the tax authorities took from the GFC was actually some businesses didn't fare as badly as they said they would or they thought they would. And so they'll be looking to see whether businesses, multinationals particularly, are using COVID-19 as an opportunity to restructure for tax reasons, for tax benefits, and just making sure that there is the commercial rationale that sits behind that as well. So I agree with you, robust evidence and analysis and support of your positions is going to be critical. Can I, while I've got you on the hook, Mike, can I maybe take us to a slightly different angle or discussion? But it's an overlap between customs and transfer pricing, or at least transfer pricing techniques or knowledge, and that is in the context of trade disputes. So if we see high prices now and uncertainty over supply and utilisation, and on local manufacturing versus imports, there's a lot of uncertainty coming down the line, and so with that probably the potential for price reductions or price crashes if we see or feel oversupply hitting our shores, or there is a move to onshoring manufacturing, as we were talking about. So a whole lot of these variables could see potential increase in dumping or anti-dumping challenges, whichever way you want to look at it. So I know that's something that you've had a fair bit to deal with in the past. How should companies be preparing themselves to deal with this risk or this challenge. And what do you think some of the authorities might be thinking about now as well?
Yeah, absolutely. So I think all roads are leading to more anti-dumping claims going forwards. So if you think about the onshoring of manufacturing that's critical to supply chains that we've been talking about already, those supply chains might be subsidized by grants. What happens 2 or 3 years down the track when it becomes apparent that some of those manufacturing activities aren't as cost competitive as they would like to be, and imports come in and undercut local manufacturing costs? We've seen that, we still see that day in, day out from steel products, for example, where local industry basically makes complaints that steel products are being dumped in Australia, and subsidies being received offshore mean that they can't be competitive as a result of that. So I think the road of onshoring manufacturing, for the reasons that Bill mentioned earlier, that might not always be as cost competitive as it could be, it's going to lead to anti-dumping claims by manufacturers in Australia that onshore that manufacturing and then want to get some form of protection perhaps over that local manufacturing, but potentially even overseas as well. If we're subsidizing certain manufacturing here and then those products go on to be sold offshore, it puts you at greater risk of anti-dumping related claims. And in the current political environment that was alluded to in terms of some of those trade wars, then that would absolutely be a clear issue. I think we've already seen that, not necessarily even with subsidization of manufacturing, but when you think about wine and barley in recent times coming out of Australia. So how do you prepare for that? Well, when it comes to the anti-dumping work, there's a lot of analysis that goes on, first of all, to support the financial position, which is certainly where I help out, but also there's a lot of economic analysis that supports the arguments as to why dumping is not an issue. In other words, what are the other economic issues which are giving rise to injury for local industry? So that comes back to, again, documenting the positions, understanding the challenges, and making it really clear what the commercial impacts on the business might be, to argue, for a company that's importing, for example, why dumping is not hurting the local industry. So I think all roads will lead that way, unfortunately.
Yeah, I agree. I think that we will see an upswing in it. I think we have to commercially. I think that companies are going to be almost emotionally forced into responding, whether they want to or not. So I'd like to turn to this question of managing the conflict between transfer pricing and customs. Leave the best till last, perhaps, but it is an ongoing challenge. They are, I wouldn't say competing priorities, but competing approaches, in the sense that, from a transfer pricing perspective, tax authorities want to see the price that you pay on importation lower, so your profits are higher. But the lower the price, the more headaches you're going to cause yourselves or customs authorities, because they want to see a higher price to apply duty on a higher price. So there is this natural tension there, and there's been attempts over many years to try and bring the two authorities together, which I'd like to explore and see, where we are getting on that long-term issue. But before I do, maybe Brianna, if I could start with you and just ask you, it was quite interesting, the poll that we had earlier. I don't know if you recall, the polling results suggested that a number of people either didn't favour one approach over the other, but dealt with it on a case-by-case basis, or maybe hadn't thought about it. What I hear from a number of multinationals is that it's probably a lower risk strategy to manage customs ahead of transfer pricing, because customs, you can have supply issues and all sorts of other issues. So how do you deal with this ongoing conflict between TP and customs? Any tips that you could provide?
Well, thankfully it hasn't come up to a massive head within ICSOM, either in Australia or elsewhere. But in terms of the approach we'd have to take, we deal with customs hundreds of times a day. And as Bill said earlier, interruptions to supply can get expensive. If you have ships or containers hanging around, they don't sit for free. We get billed for every single day. So from a business continuity perspective, and in terms of just managing our processes properly, I'd have to say, if customs came up with price A and the ATO said use price B, we'd have to put price A through the system because that would favour the business running, and ultimately that's what we're doing. We're running a business. And then the ATO we only deal with once a year, BAS aside, but for transfer pricing, it's an income tax thing. It's much more able to be controlled offline outside of the process. So that would have to take a back seat in the event of a conflict.
Yeah. And Brianna, how closely would you work between, finance and logistics and working together closely, I presume, quite closely?
We do on exceptions, and that's sort of how these organisations of the size of ICSOM need to manage these things, because clearly one department can't do everything. And in terms of importing or exporting, we've got the supply chain team, product managers, account managers, a regulatory team that deal with exceptions, and then finance that try and set up the process to run the entire thing. So my role as part of finance will be to ensure that we have the right frameworks and the right decision matrices for people within logistics and supply chain and the product managers to make the proper decisions and input the proper numbers into the process as it runs through, as we run through the interfaces with customs, with our suppliers, with our customers, because those interfaces are all incredibly automated now, and it's only going to get more so. Particularly in places like Asia and Brazil, the regulatory authorities they're dipping into those automated process information exchange to do their jobs as well. I don't see how Australia could be that far behind.
It's a good point. Mike, can I ask you a question? Because, with the tax authority Streamline assurance reviews, they started out looking at corporate tax and transfer pricing. They've added in indirect tax, GST. How easy would it be for them just to extend that to, to include review of customs duty as part of those tax reviews?
You'd have thought there was a natural fit there, wouldn't you? Like it's the logical next step. I think we've only been saved so far by the fact that customs duties siloed off with Border Force rather than the ATO. But I'd fully expect someone to connect the dots at some point and make these things joined up. And when they are, then that'll mean that advisors and companies need to also take more of a holistic view as well. I see sort of a number of issues arise because journal entries are booked that just fail to characterize transactions full stop. Like, is this a change to a product price? Is this a change to a different price, or is it just a transfer pricing adjustment? And those sorts of things give me kittens when I think ahead to how, if you chase that down to work out what the implications of it should be, the number of times they aren't fully considered is kind of scary.
Yeah, I think any company dealing with goods should not be making a transfer pricing adjustment without considering the flow on customs duty implications, that's for sure. And I think we see that happen time and time again, particularly because often transfer pricing adjustments are made centrally. So you might be a subsidiary sitting here in Australia and headquarters is making all these adjustments at year end. And the next thing you know is, when they flow through the books, it might be sort of a month or two after year end as well. So creates all sorts of headaches. Bill, can I ask you a question in relation to Border Force and how they're, maybe re-engineering themselves a little bit? As I said at the outset, the discussions between Border Force and the ATO, there's been many attempts. I know you and I have been involved in discussions with both, many years ago, trying to get some alignment, whether it's through APAs or valuation advices or just conceptually trying to get some sort of alignment or for them sort of working together. And they haven't done that very successfully in Australia or internationally to date. But are you seeing any sort of light at the end of the tunnel or darkness at the end of the tunnel that you could to share?
I think it's best characterized as an armistice at the moment, Sarah. I think the grave disappointment is that the OECD transfer pricing methods and the WTO valuation methods for customs purposes have some similarities in wording, but are fundamentally not related. And probably 2 decades now of effort's been put into coming up with some kind of combination of the two, that or meeting point, if you like. The fact is, there are, and I think you and I both know this, there are administrative means by which good outcomes can be engineered, but getting back to Mike's point about joining the dots between the two organisations, the real fear is that the computer systems are actually aligned, which would open all of this up to a lot more scrutiny, but it would also, I suspect, open up a few more opportunities around coming to a de facto approach that was kinder to industry. Ideas about global price adjustments within conglomerates is you know, a typical one. It was mentioned earlier by Mike that, you know, what's the price adjustment for? The fact is that customs duty in the main only applies to goods. It doesn't apply to services. It doesn't apply to cost of finance. All kinds of things can be distributed in a price change. So identifying what those are is a common irritation, but there's the risk of it all being deferred to a good rather than its natural category. It can be quite expensive. And if I think about what Brianna was saying about systematized transactions in global businesses, automation, etc., the prospect of having to move from a price-related approach to valuing goods in international transactions to one of the 7 other methods that are available, at least in Australia, under WTO guidelines, would be disruptive far beyond the effect of the duty impact. So there's lots of things to control under that one banner, and I don't see the progress that one would expect in the 21st century around these things. I think in some ways it may be a good thing if the ATO started contemplating these issues in totality, because I think that would probably give a stronger central point to have discussions around how it's administered and what the best outcomes are. The real difficulty at the moment is that we have polarities, as you rightly pointed out in your introduction, who have who seek different outcomes for their own revenue reasons. It needs a unified approach.
Thanks, Bill. And just to pick up on one of the points you raised just maybe 2 minutes ago in relation to unbundling services from the price of goods. And you and I have done lots of that in the past together, but I do think that it's something that a lot of businesses miss a trick on, and particularly I think transfer pricing, profit-based methods actually create the opportunity for businesses to miss the trick on that. So that if from a transfer pricing perspective, your approach is to measure a profit outcome, the tax authority doesn't, you know, in some respects care how you get to that profit outcome as long as you get the right profit outcome. But from a customs duty perspective, you've got to really be very careful about separating out any services, the value of any services from getting to that profit outcome, because otherwise you're actually paying duty on embedded services in the price of goods. So, but that's a topic we could spend, you know, a whole other session on. In fact, there's a lot of these topics we could spend a whole other session on. So what I'd like to do, because we are pretty much out of time, I'm going to give each of you 30 seconds. Was going to be a minute, now I'm going to give you 30 seconds, and I'm going to start with you, Bill, because I'm going to cut you off after 30 seconds and say, please, can you just share one insight, one takeaway that perhaps you haven't already covered off in the discussion today, just to leave the audience with one practical tip?
I think it's important to start thinking about the value and impacts of digital transfers in international commerce. Why is a person who deals with goods interested in this? Because there's a WTO, World Trade Organization, global electronic commerce moratorium on duties on transferred data and electronic services. That comes up again in December, and there is a chance that it won't be renewed. And certainly some WTO members are already champing at the bit to start issuing border duties on electronic transfers. So I think it's timely to look at exposures around that and to start dealing with governments who would love to find a revenue source of that nature. Yes, there needs to be coherent approaches across borders around this from an industry perspective.
Thanks, Bill. I think dealing with digital services taxes and digital taxes, we were going to touch on that, but there just hasn't been enough time. So I think we might have a whole different discussion on that one. I'm going to come to you next, Mike, so I'm going to leave our guest speaker, Brianna, the last say. What's your one tip?
Yep, I guess my one tip would be that we're going to see tax authorities going after their fair share of never decreasing pie like we did post GFC. So I think the quote attributed to Mark Twain was, "History doesn't repeat, but it sure does rhyme." So I'm expecting to see lots of unilateral actions, protectionist measures, and double tax in the short to medium term before the world hopefully shakes out to a fairer place.
So on that cheery note, Brianna, what would you like to leave as your key insight or takeaway?
I've got a similar concern to Mike, actually, and I think that we will see in the short to medium term a lot of very aggressive, very money-hungry revenue authorities, and I think the area to watch will be transaction taxes. Income tax is fairly old. There's lots of well-established avenues against double taxations, your FITOs, your mutually MAPs, advanced pricing arrangements. I think transaction taxes, VATs, GSTs, duties, all the way out to all these newfangled ones, things that aren't income taxes, where I'm very worried that I'll start to see double tax or even triple tax, just because they're easier to deal with from an international perspective. Where the good is, you can tax that location, or where the consumer is, you can tax that person. But the international relief is nowhere near as mature as for income tax. So that's what I think I'll be doing for the next 5 years.
Yeah, no, thank you. And I think you're all right. I mean, I think we already have more than 20 unilateral digital service tax arrangements in place, and a lot in the APAC region, in our region here. So there's a lot more of those unilaterals already in place, and I think what we actually perhaps appreciate. So look, I'd like to draw it to a close because we started a couple of minutes late, so I do want to try and finish. We're still a couple of minutes over. I'd like to very much thank our panel, Mike, Brianna, and Bill. And I'd like to ask, all of our participants today, we will send you a survey. Please do try to find the time to fill that out. It's really important to us that we get your feedback. We know whether you've enjoyed the session, not enjoyed the session, whether there are particular topics of interest. There is so much that you could talk about on this topic and many others. So, we try to get the right emphasis, but without your feedback, it's really hard for us to do that. So we greatly appreciate you participating today. Wish you all the best. Stay safe and healthy and well, everybody. And thank you so much for joining us. And we bid you goodbye, and hopefully we'll see you all again soon. And hopefully physically see you all again soon as well. So thanks for joining today, and goodbye.
Thank you.